the confirmation of the Iraqi dinar rate, and its implications for exotic currency investors' introduction. A turning point in the Forex landscape, the world of foreign exchange is vast, dynamic, and constantly shifting. Major currencies such as the US dollar, euro, and Japanese yen dominate the stage, leaving little room for most casual investors to make significant gains. But within the less visible corners of the market lies a smaller, riskier, and potentially much more rewarding segment: exotic currencies. Unlike the dollar or euro, which are heavily traded every single day in enormous volumes, exotic currencies operate under unique dynamics. Their market is thinner, their liquidity is lower, and their regulation is far more complex. Yet for retail investors who know how to navigate these waters, the opportunities can be extraordinary. On September 21, 2025, a groundbreaking announcement reshaped perceptions of the space. The United States officially confirmed an exchange rate of 0.88 for the Iraqi dinar, IQD. To many outside observers, this might sound like a small technical update, a minor recalibration among the countless figures reported daily in global finance. But to those holding Iraqi dinar or even Vietnamese dong, VND, this confirmation represented something far larger: a signal of legitimacy, a doorway to potential profit, and perhaps even the beginning of a long-awaited shift in the valuation of exotic currencies. This section will break down what this confirmation really means, why exotic currencies operate differently from their mainstream counterparts, and how informed retail investors can position themselves for success in this high-risk, high-reward environment. We will also explore the structural differences between major and exotic currencies, the liquidity challenges that define this market, the regulatory backdrop shaping it, and the reasons why 2025 may mark a watershed moment for investors focused on the Iraqi dinar and Vietnamese dong. Understanding exotic currencies and the 80-20 rule in Forex. To appreciate the importance of the Iraqi dinar's confirmed rate, one must first understand what makes exotic currencies distinct. The foreign exchange market, Forex, is by far the largest financial market in the world, with daily transaction volumes measured in the trillions of dollars. Yet roughly 80% of these transactions are handled by the world's biggest banks, central institutions, and multinational corporations. These actors primarily focus on the most liquid and stable currencies: the US dollar, euro, yen, British pound, and a handful of others. That leaves only about 20% of the market space for retail investors, smaller brokerage firms, and those trading in exotic currencies like the Iraqi dinar or Vietnamese dong. This 80-20 division is crucial. While the major currencies offer liquidity, safety, and predictable patterns, exotic currencies operate in a different universe: less stability, more volatility, but also far greater potential for dramatic gains. In this smaller space, price changes are not necessarily dictated by central banks or international corporate flows. Instead, they are influenced by political developments, regulatory confirmations, supply and demand imbalances, and even small clusters of retail activity. When a government or an institution like the United States confirms a new exchange rate, as it did with the IQD at 0.88, it can send ripples of change through this relatively thin market. Even minor movements in sentiment or demand can push prices significantly. Liquidity, the defining challenge of exotic currencies. One of the key differences between major and exotic currencies is liquidity, the ability to buy or sell an asset quickly without substantially affecting its price. For highly liquid currencies like the dollar or yen, enormous sums can move hands without causing noticeable swings. A bank can trade hundreds of millions of dollars in USD JPY without destabilizing the market. By contrast, exotic currencies like the IQD or VND have low liquidity. A relatively small purchase or sale can create sharp price fluctuations. For institutional players who rely on predictable, stable environments to execute massive transactions, this lack of liquidity is unacceptable. For retail investors, however, it presents a unique opportunity. If you hold IQD or VND, even a modest increase in demand, triggered by news such as the confirmed exchange rate, can translate into substantial gains. Yet liquidity also introduces obstacles. Unlike stock markets, where you can sell shares at the click of a button at market value, exotic currencies may require patience. Finding a buyer at the desired rate can take time. Often, investors must work with specialized dealers or brokers who understand these markets. The liquidity challenge cuts both ways. It creates both risk and reward. Those who understand this reality and prepare for it strategically are better positioned to benefit from announcements like the September 21 confirmation. Regulatory complexities and the role of legitimacy. Another factor that separates exotic currencies from mainstream ones is regulation. Each nation issues its own laws and requirements governing its currency. Global banks, with their highly automated systems, are optimized to handle currencies that fit neatly into internationally harmonized frameworks. When faced with currencies like the Iraqi dinar, which comes under specific rules from the Central Bank of Iraq and is subject to oversight from the U.S. Treasury, large institutions often step back. For the retail investor, however, regulation can serve as a signal rather than an obstacle. When the U.S. officially confirms a rate for the dinar, it isn't simply updating a number. It is providing legitimacy. It tells the market that this rate has been reviewed, acknowledged, and is being monitored within a broader regulatory framework. For years, the Iraqi dinar has been seen by some as speculative, even unstable. The September 21 confirmation changes that perception, at least partially, by anchoring it in a framework recognized by one of the world's largest economies. Legitimacy, in this context, encourages participation. Retail traders who may have hesitated before can interpret such a signal as validation. Specialized brokers can point to the confirmation as evidence of stability. And while major banks may still avoid exotic currencies for structural reasons, retail investors can lean on this regulatory acknowledgement as a reason to act. Why the 0.88 rate matters at first glance. 0.88 may not appear extraordinary, but for investors who purchase dinar at lower valuations, this confirmation could represent a transformative increase in value. Gains in exotic currencies don't play out the same way they do with majors. In mainstream Forex, when the dollar strengthens against the euro, the change is immediately reflected across all trading platforms. For the dinar, realizing those gains requires additional steps. Finding buyers at the new rate, working through specialized currency dealers, navigating additional fees, or waiting periods. These complexities mean that while the potential gains are real, they are not instant. It requires patience, strategy, and often a network of trustworthy intermediaries. For investors, the 0.88 confirmation is not simply about today's price. It is about future potential, about the doors it opens for appreciation, and the confidence it injects into the market. The Vietnamese dong, a parallel story in motion. While the Iraqi dinar dominates today's news, the Vietnamese dong, VND, deserves equal attention. Vietnam's economy has been on a consistent upward trajectory, fueled by its rapidly expanding manufacturing sector, increasing foreign investment, and integration into global supply chains. As demand for Vietnamese exports grows, so too does the relevance of its currency. Like the dinar, the dong exists primarily within the 20% retail space of Forex trading. Major banks do not actively trade it, but retail investors and smaller firms are beginning to recognize its potential. The IQD confirmation indirectly shines a spotlight on the VND, reminding the investment community that exotic currencies can, and do, see significant movement under the right conditions. Vietnam's economic foundation also sets it apart. Unlike Iraq, where oil remains the dominant driver of national revenue, Vietnam's growth is tied to diversified manufacturing, exports, and increasing foreign direct investment. This makes the VND a currency with rising international demand, even if it has not yet reached the liquidity or recognition of major currencies. Political stability and economic reform, as catalysts, exotic currency values, are heavily influenced by political and economic stability. Iraq has made strides in recent years. Increased oil production, government reforms targeting corruption and inefficiency, expanded cooperation with international financial authorities. Vietnam, on the other hand, has strengthened its global standing through manufacturing, trade, and integration into major international agreements. Both countries' political and economic advancements serve as catalysts for currency appreciation. Investors must pay attention not only to exchange rate confirmations, but also to the broader context. because currency value is ultimately tied to national performance and credibility. Counterparty risk. The hidden challenge for investors when global banks engage in Forex, they rely on vast networks of reliable counterparties, other institutions willing to buy and sell large volumes at a moment's notice. Exotic currencies often lack these networks. This counterparty risk, the risk that you cannot find a reliable buyer or seller, discourages institutions from heavy involvement. For retail investors, the solution lies in specialized brokers and niche dealer networks. These players are accustomed to managing exotic currency transactions, even if at smaller scales. The September 21 confirmation reduces uncertainty by providing a clear rate, which in turn makes counterparties more comfortable engaging. While the risk remains, the validation helps narrow it. What the confirmation means for dinar holders today for those holding Iraqi dinar, the key takeaway is clear. The confirmed 0.88 rate signals a potential rise in value, but converting that potential into realized profit requires careful planning. Unlike stock investments, which can be liquidated almost instantly, exotic currencies demand strategic timing, waiting for optimal buyer-interest-broker interactions, working through specialized dealers' patience, accepting delays or additional fees as part of the process. The long-term potential is significant. Savvy investors understand that exotic currency trading is not about chasing quick wins. It is about positioning oneself carefully, monitoring geopolitical and economic signals, and capitalizing when legitimacy and opportunity align, as they have now with the dinar. The September 21, 2025 confirmation of the Iraqi dinar's exchange rate is more than a number. It represents a shift in recognition, a validation of legitimacy, and a potential turning point for retail investors in exotic currencies. For IQD holders, it could mean substantial percentage gains compared to previous purchase rates. For VND investors, it offers a reminder that rising economies with growing international demand may soon experience similar recognition. Exotic currencies exist within the 20% margin of the Forex market, an intimidating, volatile, and often misunderstood space. But it is also where opportunities reside, away from the crowded competition of institutional giants. The key for investors is knowledge, patience, and strategic positioning. Today's confirmation does not guarantee instant riches, but it does illuminate a pathway forward for those who understand the dynamics at play. 2025 may prove to be the year when exotic currencies, long overlooked, finally begin to claim the recognition they deserve. Strategies, risks, and the future outlook for Iraqi dinar and Vietnamese dong, investors. The September 21, 2025 confirmation of the 0.88 rate for the Iraqi dinar was more than a headline. It was a call to action for thousands of retail investors who have been holding IQD or exploring exotic currencies like the Vietnamese dong, VND. But as any experienced trader knows, news is only the starting point. The critical question is, what should investors do now? This section explores the practical side of exotic currency investing. We will look at strategies for managing IQD and VND holdings, analyze the risks that come with participating in such a thin and volatile market, and outline possible scenarios for the years ahead. We will also place these currencies in their broader political, economic, and regulatory context, because in exotic Forex, the bigger picture is often just as important as the numbers themselves. The unique nature of exotic currency strategies when dealing with mainstream currencies. Strategies revolve around technical analysis, macroeconomic trends, and institutional flows. With exotic currencies like the IQD and VND, the rules are different. Investors cannot rely on charts alone. Instead, successful strategies tend to combine three key elements. 1. Patience and long horizons. Gains are rarely immediate. Investors must be prepared to wait months or even years before market conditions align. 2. Dealer and broker relationships. Unlike stocks or major currency pairs, exotic currencies cannot always be sold at the click of a button. Working with reliable brokers is essential. 3. Attention to political and economic signals. Shifts in government policy, international agreements, and official recognitions, like the September 21 confirmation, often drive valuations more than technical indicators. In other words, The playbook for exotic currencies is less about short-term trading and more about strategic positioning. Patience as a core strategy for IQD holders, the 0.88 confirmation is undeniably positive. But cashing out immediately may not yield maximum value. Exotic currencies are thinly traded, meaning it can take time for buyer demand to catch up with new valuations. This waiting period is not wasted time, it is part of the strategy. Consider two investors. Investor A rushes to liquidate immediately after the announcement. They may succeed, but they risk paying higher dealer fees and missing potential appreciation as the market stabilizes. Investor B waits, monitoring the market for new demand waves triggered by the announcement. By choosing the right timing, they may realize far higher returns. Patience allows retail investors to let the market adjust, let regulatory confirmations ripple outward, and wait for stronger counterparties to appear. Building reliable dealer networks, because IQD and VND are not broadly traded on mainstream Forex platforms, investors often rely on specialized dealers or brokers. The quality of these relationships can make or break a strategy. Key considerations when selecting a dealer include reputation and track record. Has the dealer been in business for years, or are they a newcomer chasing short-term profits? Transparency of fees. Exotic currency transactions often involve spreads and service charges. Clear disclosure matters. Liquidity access. Some dealers have better connections to counterparties, enabling smoother transactions. The September 21 confirmation strengthens dealer networks by providing a reference point. A confirmed official rate of 0.88 gives brokers a benchmark to structure their offers, making negotiations more straightforward for investors. Diversification across exotic currencies. Another strategy is diversification. While the Iraqi dinar is receiving attention now, the Vietnamese dong has long been considered another promising exotic currency. By spreading investments between the two, investors can balance risk. Iraqi dinar IQD, potentially explosive gains tied to oil revenues, economic reforms, and international recognition. But risks remain high due to political fragility. Vietnamese dong, VND, slower, steadier growth tied to manufacturing and exports. Vietnam's integration into global trade creates strong fundamentals, though its currency is not yet fully liberalized. Holding both allows investors to capture upside potential in Iraq, while benefiting from Vietnam's more gradual but stable trajectory. Risk analysis. The other side of the coin. No investment strategy is complete without addressing risk. Exotic currencies, by definition, carry elevated risk levels compared to mainstream assets. The September 21 announcement provides legitimacy, but it does not eliminate uncertainty. 1. Liquidity risk. As noted earlier, the lack of deep markets means selling may take time or come at a discount. Even with confirmed rates, finding a buyer at the desired price is not guaranteed. 2. Regulatory risk. While the U.S. confirmation lends credibility, exotic currencies remain subject to local laws. Iraq's monetary policy or Vietnam's central bank decisions could still impose restrictions on convertibility. 3. Political risk. Exotic currencies are deeply tied to domestic stability. Any political upheaval, corruption scandal, or policy reversal in Iraq or Vietnam could reverse gains. 4. Counterparty risk. Retail investors often deal with smaller brokers who may not have the reliability of major financial institutions. If a dealer defaults or engages in fraudulent practices, investors could face losses. 5. Market perception. Risk perception drives demand in exotic markets. If the broader investor community questions the validity of a rate confirmation or loses confidence in a currency, prices can stagnate despite fundamentals. Managing these risks requires research, diversification, and caution. The role of political and economic developments. Let's look more closely at the two countries in question. Iraq and the Iraqi dinar, IQD. Iraq's economy is heavily reliant on oil, but reforms in recent years aim to diversify revenues. The government has introduced anti-corruption measures, strengthened ties with international institutions, and worked to stabilize its financial system. The September 21 confirmation reflects recognition of these reforms. If Iraq continues down this path, boosting oil exports, improving governance, and collaborating internationally, the dinar could see further appreciation. However, the risks remain real. Political infighting, regional instability, or oil market downturns could disrupt progress. For investors, Iraq represents high risk, high reward. Vietnam and the Vietnamese dong, VND Vietnam's trajectory is quite different. The country has become a manufacturing powerhouse, attracting foreign investment from global corporations seeking alternatives to China. Its export-driven growth, young workforce, and improving infrastructure make it one of Asia's rising economies. The dong benefits indirectly from this momentum. As Vietnam continues to integrate into global trade agreements, pressure will mount for its currency to gain broader recognition. While Vietnam's government has historically managed the dong tightly to maintain competitiveness, long-term structural growth supports the case for appreciation. Compared to Iraq, Vietnam offers lower risk, slower but steadier reward. Long-term outlook: where could IQD and VND go? Predicting the exact trajectory of exotic currencies is impossible. But we can outline scenarios. Iraqi Dinar IQD optimistic scenario. Continued oil expansion, effective reforms, and increasing international legitimacy push the dinar toward parity with regional currencies. Investors who entered early could see exponential gains. Moderate scenario. Progress is slow but steady. The dinar holds at or near the 0.88 rate, offering modest appreciation over time. Pessimistic scenario. Political turmoil or economic shocks derail reforms, causing the dinar to lose value despite the 2025 confirmation. Vietnamese dong, VND optimistic scenario. Vietnam's manufacturing and trade boom drives international acceptance of the dong, with gradual appreciation and increasing liquidity. Moderate scenario. The dong strengthens incrementally, benefiting from economic growth but constrained by government currency controls. Pessimistic scenario. External shocks, global recession, trade disruptions weaken demand for Vietnam's exports, limiting dong appreciation. For investors, the takeaway is clear. Exotic currencies can deliver extraordinary returns, but they require acceptance of uncertainty and a long-term perspective. Practical tips for retail investors to translate theory into practice. Here are actionable guidelines. 1. Set realistic expectations. Exotic currencies are not get-rich-quick investments. Returns, if they come, may take years. 2. Keep records, document purchases, dealer interactions, and exchange confirmations. Transparency matters in thin markets. 3. Use reputable brokers. Avoid unknown intermediaries. The risk of fraud is higher in exotic spaces. 4. Monitor news constantly. Political or regulatory developments can shift markets overnight. 5. Diversify holdings. Spread investments not only between IQD and VND, but also across other assets. 6. Plan for liquidity delays. Anticipate that selling may take time and may involve fees. Conclusion. The path forward: the September 21, 2025 confirmation of the Iraqi dinar's exchange rate is a landmark moment for exotic currency investors. It demonstrates that with the right conditions, political stability, economic reform, and regulatory acknowledgement, even currencies long ignored by global banks can gain recognition. For IQD holders, this may mark the beginning of a new era of legitimacy and opportunity. For VND investors, it reinforces the principle that rising economies eventually see their currencies follow suit. But opportunity does not come without risk. Exotic currency investing is a world where patience, strategic dealer relationships, and risk management matter more than quick trades or technical charts. Those who understand the dynamics, liquidity constraints, regulatory hurdles, political dependencies, stand the best chance of turning potential into profit. As we look ahead, the future of IQD and VND will hinge on whether Iraq and Vietnam continue their paths of reform, stability, and integration into the global financial system. If they succeed, retail investors positioned today may be well rewarded in the years to come. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.